You might want to unmute yourself.
Jedi action.
No, that's a different computer up here. I'm on this one. That's computer over here. So yeah, Brady, we were just kind of getting to know each other a little bit, talking how timely it is, get a tax class in March. Perfect. He is a friend of Ashley Strong's. A lot of you know Ashley. That's how that introduction got put together. So you guys too, when you know professionals, you were just talking about some lenders and title that you went to lunch with the other day when you were in here watching that webinar. We like to share good content and good people and good professionals. So we have high expectations since you were recommended and referred. Yeah, but for you guys like Steve and let's see, I don't know who else on here in a different state, but this kind of advice and with his company, he can do tax services across the country. So keep that in mind if you make a connection with Brady. Brady Slack is going to talk to us about taxes managers with real estate. This is all good content too for your clients, your SOI, right? Eric was just talking the other day about all the deals that he's gotten that he can directly link to a conversation that got started from a training. Whether it was a lending option or whatever, it's like, so pay attention and keep that in mind as you're learning for yourselves. This is great content for our SOI and it's a talking point. If you're interested in the recording of this, hit me up. This is going to be recorded and at some point it'll get downloaded from Zoom. I can't promise when. I'm a little behind on that, but a great shareable, right? So start conversations. Hey, I just use a takeaway or 2 or 3 from today, make a post about it. Start a conversation, and real estate has a lot of advantages. So that's what we're going to hear about. So Brady Slack, come on up, finish your introduction, tell them a little bit more about yourself, and then rip into it.
Awesome.
Okay, thanks, man.
I appreciate it. Thanks, guys, for having me. I don't know if Ashley's on, but I'll thank her later for introducing me to you guys. To give you guys a little bit more context about who I am, my name is Brady Slack. I'm the owner of High Country Finance. We are a full service tax and accounting firm based here out of Draper, Utah. I got started, I kind of got tripped and then pushed into the accounting industry. I was studying accounting in school. I didn't really want to be an accountant. I just figured accounting set me a place in the job market rather than a general business management degree. But then my now father-in-law said, hey, my accountant needs some help. We good?
No, I was just trying to give you a water in case you need water.
My now father-in-law said, hey, my accountant needs some help. And I thought, great, that's a great way into the industry, get some experience. And so he tripped me, and then my wife pushed me because I would be making more money at the time. And so that's kind of how I got my start. Thank you. I started out as an intern, worked my way up into an advisor role with this firm very quickly within about 1.5 years. And then some things happened right around the time period of COVID. And I left and started my own accounting firm. I now have about 10 accountants that work with and underneath me. We service clients all across the United States, work with some individuals that are living in Puerto Rico. So we have some international and foreign stuff. I just acquired a couple of clients that are actually native to China. They're Chinese national citizens, but they have rental real estate here in Utah because the market is booming quite a bit. So we're dealing a little bit with that too. It's just fun. I deal primarily with individuals that are in sales organizations, whether you are an individual sales associate as an independent contractor, much like a real estate agent, up to large corporations that are doing $20 to $50 million in revenue. At that point, we really structure their finances to push them into bringing in-house accountants in and making sure that they're structured to be able to take that on. Today, I have 2 goals, and I'll write them up on the board. But these 2 goals that I have, are we good?
Yep, just ignore it.
There we go. No, you guys. My 2 goals for today are 1, teach you guys how to pay less in taxes. Okay. And then step 2 or goal 2 would be how you guys can not only help yourselves pay less in taxes, but maybe some tips and tricks or some strategies to help your clients pay less in taxes. I know a lot of real estate agents work with investors, and real estate investing is one of the best tax strategies that we have. So help clients as well. Before I get kind of too deep into a presentation, I want to know what you guys would like to learn today about taxes. What questions do you guys have? Phil, if you're on Zoom,
how to not pay them.
Or strategies to pay way less.
Okay, we'll keep that the
No,
same.
I think that's a big one, right?
Yeah.
I don't think people realize how many deductions they can take.
Okay, so that's another one that a lot of people ask.
Uncommon real estate deductions or realtor deductions.
Okay, we'll leave that with deductions.
Yeah.
Good ones. You were gonna.
It was the same thing, like write-offs and deductions that we would typically miss.
How to
Cool.
maximize the 1031 exchange, so you're gonna dive
Oh.
into that.
Okay, 1031 exchanges. And I saw you guys had a training about this not too long ago, a couple weeks ago. I was looking.
Yep,
Cool.
yep, it was good.
Okay. Anyone online, what would you guys like to learn today about taxes? Feel free to unmute yourself and then. Nothing, you don't want to learn anything about taxes.
I'll just shut off the Zoom then.
You're good. Okay, 3 things that we want to learn about taxes. Okay, this will be good. We can go over some of that stuff. So first off, for you guys, I know March 15th kind of ended pretty abruptly. At least it did for me. That time, that deadline passed pretty quick. That was the deadline to file your business extensions or file your business tax returns. And I'll kind of go over the business aspect of things. That's a question that I get a lot: LLCs versus S corporations, how you should be taxed, and then that's your business side, and then what your real estate should be doing as well. Okay, I'm not an attorney. I'll never profess to be an attorney, but I know an awfully lot about that stuff. So we can kind of talk about that today as well. Okay. Typically with our clients, we run them through a 3-step process to make sure that they're paying the fewest amount of taxes possible. Okay. Step 1 that we always take our clients through is simplify. The main reason we go through a simplification process with our clients is because just in general, people don't know how money works. They don't know how taxes work. They don't know how taxes are calculated. They don't properly manage their money. And so for us, it is very important as we onboard clients to make sure that they understand how their money is working. Okay. When we go through the simplification process, we're always talking about entity structures. Okay, one, because we work primarily with business owners and we want to make sure that they have the right business structures. Okay, so we'll talk about entities. Just one quick question, and then we'll kind of go into step 2. But how many of you guys, how much money do you think you need to be making before you set up an LLC?
Any money, I think.
Any money? 0. Okay. What else? Any money? An LLC does not protect you against taxes. Okay, for ordinary income. So you guys as real estate agents, question?
No liability.
Yeah, yep. So you guys as real estate agents, if you're making over, based on our fee structure, but I would say just in general, if your net profit is over $30,000 to $40,000 in your business, your LLC should be taxed as an S corp. Because in your S corporation is where your tax savings happen. You become an employee of your own business, and then you pay yourself a wage, and you only pay certain taxes on that wage rather than paying all the taxes on all of it.
So is that just an election, a
That is
tax
just
filing
election.
election?
Yeah, yep. The interesting thing, and this is maybe a conversation for another day, but there are tax classifications and entity classifications based on the state or the IRS. So an S corporation is just a way that an entity is taxed. Okay, good question. Yeah, go for it.
Do you want to keep your money in the S corp, or do you want to get it out of the S corp and get it into your LLCs if you have S corp and then LLCs?
Well, you have an S corp. He's talking about you have an LLC, but you can be
And
taxed
then you
as an S
tax
corp.
your LLC as an S corporation.
So it's still an LLC.
Okay.
One
Yeah,
entity.
different question. Different
Okay.
question, has nothing to do with what you just said.
Okay, okay, go for it.
How's that different between an LLC to a partnership? Right now I'm an LLC and then in a partnership.
Who's the other partner?
It's just spouse.
Okay, that's fine. There are a couple different ways that an LLC is classified. One is a single member and the other is a partnership. One owner, multiple owners, right? But again, it would be just the same election that you would file with the IRS to tax your LLC as an S corporation. Okay. That was a good question. Any other questions so far? No. The other reason why we simplify things for all of our clients is because what I find is a lot of clients are not reporting their income and expenses correctly, and they're wide open to an audit. I'm not afraid of an audit unless, well, I'm not afraid of an audit, but an audit can be sticky if you do not have the proper reporting. Okay, which kinds of, it leads us into step 2, which in this case, we reduce. Okay, obviously we want to reduce your tax, but we also want to reduce your liability. What does this mean? Okay, for all of you guys, because all of you guys are independent contractors, when you have a business, there are a couple things that you need to have, and there are no ifs, ands, or buts about it. You need to be keeping track of your income and your expenses. Okay, how you do that is totally up to you and up to your discretion, or up to the discretion of you and your accountant. For our clients, the easiest and most reputable way to do that is open up a QuickBooks account. That's the most robust way to keep track of all of your income and all of your expenses. Link it to your business accounts and your credit card accounts. That way, in real time, we know exactly how much money you're making and how much you're spending and what you're spending that money on. Okay. Liability wise, if you are a business owner and you are an S corporation, okay, you also need to be paying yourself a wage. I've received about 4 calls just in the last week from people from other accounting firms that are getting audited because they were not paying themselves a wage. And now the IRS wants to classify all of their income and tax them Social Security and Medicare taxes on all of their income for the past 2 years. That's 15.3% in additional taxes that they're going to have to pay. That's a kick in the shorts. Okay. So if you are an S corporation, either a corporation taxed as an S corporation or an LLC taxed as an S corporation, you need to have good reporting and you need to have a wage, paying yourself a wage. Okay. Now, I'll kind of go into some of these questions, not paying and deductions. Okay. The easiest thing for deductions is to ask yourselves, when you're paying for something, does this have anything to do with my business? The next question I would ask you to make is, how can this have something to do with my business? Okay. As an entrepreneur, as a business owner, a lot of what I do is for my business. It is to make money. It is to increase my clients. It is to help pay wages for my employees. And so whether that be question, yeah,
this is, and Ashley's on here and she helps me with my taxes. That's my oldest daughter.
oh,
She
okay.
graduated in accounting, so her master's in accounting. So let's say you're like extremely high stress and you need massages once a week. Is that a write-off?
Are asking for a friend? Just kidding.
No, she's asking for me.
I'm asking for both.
Just kidding. No, absolutely. The questions that I have to answer or that an auditor are going to ask is, does it have a business purpose? Is it necessary?
To keep us healthy.
Is it necessary to help me make more money? Well, what does that money making entail? I just realized I spelled necessary wrong. Sorry. I'm great with math, not language arts. Is it necessary? Is it necessary in making me more money? Well, again, maybe I go to a massage and I say, if I don't feel good, I cannot communicate with clients. I cannot go to showings. I cannot go to the office. And so then it would inherently affect my business. If I
not been running.
No, I
if I
have
didn't.
been, but she sees
She
it.
challenged you.
And she challenged me, and I was like, Ash, it's like at our age with how much we work out, we really need it so that we can stay on top
Healthy.
of our game. Yeah.
Absolutely.
I'm just a rule follower. That's
All accountants are rule followers.
You're good. So again, I always go back to the question. Now, I've had my fair share of audits, and I get asked those questions. How is it necessary for my business? You know, and I can directly correlate through different medical studies that say if I don't take care of my body, I cannot work.
So that also goes to, and I'm saying this to her because she's a nurse. but it also goes to like your health, like if I'm wondering about like hormonal therapy or different things like that that help you stay strong so that you can work 12 to 14-hour days.
So
Now
again,
you're
I would,
crossing the line.
no, I'm not, no, I would maybe reclassify it. How are you paying yourself as far as fringe benefits or employer programs like medical expenses from your business? Because we might be able to classify those as medical expenses rather than like health and wellness or education and training or something
And
like
that would be a
that.
better.
So sometimes we classify things a little bit differently based on what the need is in the business.
So it sounds like everybody needs to have a strategy session with their
No.
tax guy and say,
Ab-
this is what.
Absolutely. Yeah, and again, it's all coming from the simplification process. Me as an accountant, I have to understand what you're doing, how you're doing business, how you're making money, what you're spending money on, so that I can help you decide what you can spend money on and how you can deduct it and what you probably should not be deducting, to be honest with you.
One more and then I won't.
Go for it. No, go for it.
But this is for all of us in the room. Let's say we need to dress the part as a real estate agent.
Absolutely.
What about our clothes?
Uniforms expense,
That's-
100%.
I'm just saying it because a challenge.
Yes.
Remember, I
No.
get challenged once in a
Like
while.
he probably. Yeah, absolutely. No, did I just hit one team lose? I can change that. Like you can pay me more at the end, right? I can change that. No, but yeah, uniforms expense. My business pays for my shirt. My business pays for my pants because this is what I present and this is what I work in. Right
Yeah.
now, obviously, like if I go buy a swimsuit from Lululemon or something, that's probably not business
Michelle,
attire.
nope.
But
It is.
now I see your, well, you know, I see your Lulu short, you know,
Yeah.
you're rocking it, so I would deduct it, right? But if again, I help my clients ask the question, one, does this have anything to do with my business? Because if I can answer that question, then it comes down to purpose, necessary, ordinary, and reasonable, and that's easy to challenge, right? Then the next question I have them ask is, how can this be associated with my business?
So let's say you are growing something and you're trying to show lifestyle. Let's take Instagram, for instance, where you've got someone who's using Instagram
Yeah,
to show lifestyle, to grow their business
Yeah.
in real estate or what have you. You could literally say that that's when so might be.
yeah, absolutely. One of my clients owns a health and fitness company. She does health and wellness courses and fitness courses. And one of her questions, she went to New York and she's an influencer. That's how she gets her clients. That's where she sells her products. You know, she has some protein powders and some other health supplements that she sells. So she asked me, she goes, I'm going to New York and I'm buying this purse. Can I deduct that? And I said, well, how many, you know, and we correlate that to likes and subscribers and followers and conversions into her health and fitness, you know, business. And so, yeah, absolutely, because that's increasing your followers, that's increasing your business. That is a business expense, right? That's kind of what we go
This should be
to.
opening everyone's minds to these things, because as a real estate agent,
Does that go for kilts?
Yeah. I was just gonna say that, hey, Steve.
he's called the kilted realtor. So.
Oh, he really is.
He really
Yeah.
is.
Steve really is the kilt.
Yeah.
You're the kilt. Who's Steve? I just want to see his face. That's really all Steve, the kilted realtor.
Mhm.
If you are the kilted,
There he is.
yes.
Yeah.
Okay, that absolutely. If you sell real estate in your kilt, Steve, and I'm your accountant, I'm gonna go to bat for that 100%.
It's his brand, it's his
Yeah,
brand,
that's your
it's not
brand.
just. what-
That's how you make money.
See why we.
Perfect. That's what I needed to hear.
He's like, going shopping.
Absolutely.
Michelle.
You know,
Your wife's on here.
no, shoot. Sorry, man. Absolutely, Steve. If that is how you brand yourself, that's what differentiates you from other realtors. I would 100% deduct that as a business uniform expense. Right. Again, now I can't be going and buying, you know, it's got to be ordinary and reasonable, but that's how I maximize that. Now, again, I don't typically work a lot with W-2 individuals just because of the fact that they don't get any of this. They don't qualify for anything. My hands are tied with those individuals. So I really try and help my clients that do have some of those benefits, who are 1099, who do own their own business. Let's maximize these, okay? Because that's what's going to help us reduce. What we're going to do in this process is we're also going to reduce your stress. How many of you guys absolutely love going to your tax appointment? right? I've never had someone say, I love my tax
I
appointment.
do because
You're a
it's
liar.
organized.
You're a
It's
liar.
organized and I can just hand it over and they're like, oh, I've never had it so much.
Yeah, I'm assuming you can thank Ashley for that, right?
Yeah.
But in most instances, in reality, people with taxes stress them out. They hate thinking about money. That's why money is always one of the leading causes of divorce, because people just really don't want to talk about it. Okay. In this process, my team really focuses on making sure you understand what's going on, because knowledge is the first thing that is going to replace that fear. Once you know what's going on with your money, the fear is just kind of subdued. Okay. Now, number 3, this is where we really start to have some fun. We're going to start to produce. Okay. People always come to me and ask me where they should put their money, what is going to help them grow their money the quickest. And to be honest with you, the answer is I can't help you start to grow your wealth if you have no idea of what wealth you actually have. Just in general, like I mentioned before, people really don't know how much money they're making. They have no idea how much money they're spending. I can't tell you how many tax appointments this year I've had where I enter in the total amount of income that a client has made and they say, where did it all go? You know, and that happens to a lot of us, life happens. But if we can start to take care of the simplification and the reduction, then we can really start to produce. Then we can really start to focus on how you're receiving your money, whether that's wage or distributions or draws through these different arenas in your businesses. We can talk about lending. You know, for you guys as real estate agents, your best investment is real estate. When I meet with a group of real estate agents, I always ask the question, who here does not have rental real estate? And I'm pretty harsh with that individual because they should have rental real estate. If you have rental real estate as a real estate professional, you do not pay taxes ever, to be honest with you. Because there are strategies like a cost segregation analysis, which completely eliminate all of your liabilities. There's a 1031 exchange to where we always defer capital gains taxes and kick those things down the road. Okay. Now, real quick, I'm just going to eliminate some of this stuff so I can write something else. Going back to kind of the reduction, and this will help us go into this producing, but the best deductions are always business deductions. The second best deductions are always real estate deductions. The fourth best investment or deductions, excuse me, are personal deductions. Now, the reason they're third best, is because we're kind of limited as to how many personal deductions we can claim. State and local taxes, charitable contributions, medical expenses that exceed over a certain percentage of my adjusted gross income, you know, and that's about it. Maybe a couple more. The fourth best deduction are investment deductions. Now, the funny thing about this list of the best types of deductions is this also outlines the best types of investments. Okay, what investments are always the best? The best investments are always into businesses. Business owners and investors always pay the fewest amount of taxes possible. How many of you guys have read Rich Dad Poor Dad or heard of Robert Kiyosaki? Okay, that's something that that's something that you have. I highly recommend you read it.
What was it called?
Rich Dad
Sorry.
Poor Dad. Rich Dad Poor Dad.
I saw him go like this. Like,
He did.
helped you out. Thanks.
Rich Dad Poor Dad. Okay, he talks about his cash flow quadrant. Business owners and investors always pay the fewest amount of taxes possible. Okay. Another book I'll add to it is his accountant's name is Tom Nerd Alert. His accountant's name is Tom Wheelwright, and he has a book called Tax Free Wealth. Highly recommend that book as well.
I love that.
I'm actually in his accounting group. I'm speaking on stage with Tom Wheelwright in April.
Really?
Yeah.
That's cool. That's
Yeah.
awesome.
Yep. Fun fact.
Where's
It's
this?
fun.
Here in Utah at a solar convention.
Oh, cool.
Yeah.
What was his name again?
Tom Wheelwright. And he has a podcast called Wealthability for any of you guys that want to listen.
Wealthability?
Wealthability. Yeah. All right, that up on the board.
Listen to that.
I didn't know you had a podcast.
Yeah, really, really good podcast. Anyways, the second best deductions are real estate deductions. Now, the only reason why on this list I have real estate deductions as second best are because not everyone can utilize all of the real estate deductions. If you are not a real estate professional, you are capped as to how much real estate losses you can use to offset ordinary income. That's the only reason why it's number two. Really, it's like a 1A, 1B tied for first place kind of situation. But again, real estate is such a great investment, okay? Both on the equity side of things and on the cash flow side, okay? That's how I'm gonna balance that. Now, one again, kind of going into goal 2 for your clients, the reason why real estate is such a great investment is because I can never, it is one of the only, if not the only investments where I do not pay taxes on the cash flow, the immediate benefit of that rental real estate. And I can, doesn't mean I always will, but I can defer taxes for forever through my real estate, okay? Is everyone okay? If you want to take a picture of this, I'm gonna erase it just to kind of show you how that would work. if
Got it,
that's okay.
thank you, got it,
You've
awesome.
got it. I know a couple of you, take
you
a
almost
picture,
like
Lynn,
mine.
take a picture.
Thank
If
you.
anyone needs a picture, you can ask Lynn. So going through a little example real quick with you guys. How do I not pay taxes right now? Okay. When you have an investment property, you have rental income. Now, just like any other business venture, I am going to reduce this rental income with business expenses, okay? Obviously, you'll be deducting your mortgage interest, you'll be deducting your HOAs, your property taxes, your insurances, maybe you have some travel, right? Going to Destin, Florida after tax season, thank heavens for a little bit of a break. But I always tell people invest where you want to travel, right? Invest in Florida if you like to spend time in Florida, because that way, every time you travel to Florida, it's a business deduction, right? Because you're checking on your rental real estate. But maybe some travel, maybe some management expense fees, and then you have a net profit. Okay. Now, obviously, the goal of rental real estate is to make money. I never want my expenses to exceed my cash flow. Okay, that's really why I get into rental real estate. But on paper, rental real estate should always be a loss. If it's not, find a new accountant or find a new property. Okay, to be honest with you, because what I can then do is I can depreciate my property. All depreciation is, for those of you who might not know what it is a cost recovery. Okay. It wouldn't make a ton of sense to expense $300,000 in 1 year when I'm only making $20,000. So what the IRS has allowed us to do is expense a portion of that each year for a number of years. That's all depreciation is. Okay, so I allocate a certain percentage in each year. But this depreciation always will decrease my income to show a loss on paper. Now, depreciation is a cashless expense. It does not hurt my lending ability, which is great because you guys as real estate professionals can invest into real estate, use the depreciation to offset your ordinary income, but when you go and try and qualify for loans, still qualify, right? Question.
Good question. So if you were just starting, it wouldn't be better to write it all off and then take an NOL forward?
Well, again, if that loss is generated from depreciation, it's not going to matter because when a loan officer sees this, that depreciable expense adds back in for your loan value because it's an asset. So there wouldn't be a reason to carry over a net operating loss. Does that make sense? Now, again, in some instances, this is just kind of when it comes back to planning, whether we're talking about real estate or your ordinary business, maybe we omit expenses to help you qualify and show a higher income. Right? And then we can always go back and amend the tax return, include the omitted expenses to reduce the tax owed.
That's where the strategy planning comes in.
Yeah.
Some of our clients could qualify if they had filed different.
Absolutely. Accountants do a great, well, most accountants, some accountants do a great job at reducing the amount of taxes owed, but they don't always take into consideration the investment plan that the client has, and reducing that income will eliminate the possibility to qualify. But if it's cost from depreciation, we'll take it.
Do you guys do cost segregation studies?
So that's what I
Oh,
was gonna
sorry.
get into next. Do you want to teach on that? So for just the general public, this is great. Now, if you qualify as a real estate professional, right? What we do is we want to do what's called a cost segregation analysis. Okay. Have any of you not heard of a cost segregation analysis, just out of curiosity? Anyone online? A cost segregation analysis is done by an accountant and an engineer. And what they do is they go into a property, and not all of the assets in that property have a depreciable life of 27.5 or 39 years, right? We all know that flooring is not going to last you 27.5 years. If it does, tell me where you bought it from, because I'd like to install it in my own home, right? We all know that the electrical is not scheduled to last 27.5 or 39 years. Same goes with the carpet, the appliances, right? And so what that engineer and accountant do is they go into the property and they assign a specific cost to the different assets. They segregate the costs of the entire project into specific asset classes. The good thing about this is if you buy a property for $300,000, you no longer take $300,000 over 27.5 years, because your electrical is now only depreciable over 7 years or 12 years. Your flooring is depreciable over 10 years, different things like that. And so really what I do is I bump a lot of those depreciation expenses into years 1 through 12. So I'm writing sideways, which accelerate or increase the amount of depreciation expenses that I have. Now, you guys as real estate professionals can use 100% of the losses to offset the ordinary income you guys generate in your personal businesses, your LLCs, taxes, S corporations, which effectively reduce your income to not pay taxes. My real estate clients that are investing into real estate, I have one agent who you know, who made just over $1.4 million last year, will pay this much in taxes to the federal government, because he's investing into real estate, taking advantage of cost segregation analysis. Now, with that same client, what we had to do in part of our planning meetings last year was some of his properties, or he had made enough income to where his depreciation expenses were not necessarily offsetting the rest of his generated income. So what did we do? We did a 1031 exchange, which we did this with 2 fourplexes and a duplex that he owned. And we moved, or we exchanged those properties for new assets. He had about $800,000 in equity between the 3 different properties. And he went and bought 2 16plexes, right? For a couple $1 million, because that equity was his down payment in the properties. Now, by doing that 1031 exchange, he did not pay taxes on the capital gains when he sold the properties. He moved that equity into the new projects, and he restarted a depreciation schedule with the cost segregation analysis based on his adjusted basis in the new properties. What did that do for him? Not only did it increase his monthly rents from about $4,000 between the fourplexes and the duplex profits, but now his monthly profit and cash flow is about $8,000. So it almost doubled his monthly cash flow. It also completely decreased his taxable income to roughly 0. So he's not paying any taxes. So not only is it making him more money, but it's also saving him money. Okay. Question?
So do you strategize then with your clients, like you take a look at the health of everything they have, and then you come up with some ideas to help them?
Yeah.
Or is it mostly the client coming to you and saying, hey, I have these ideas?
A little bit of both. I can do a lot of different things with our clients. I have clients that are always investing into tax equity projects in the solar industry to buy tax credits to reduce their taxable income. The ROI isn't as great, but it does reduce their tax liability. I have clients that invest into oil and gas projects. The dividends are really good, but they really just do it for the first and second year tax benefits, right? I have clients that are investing into real estate. I have clients that are investing into crypto. No matter how you want to invest your money, we will apply that into a tax strategy to make sure that you effectively pay the least amount of taxes, not only now, but also in the future as well.
So would you consider your firm aggressive then, like aggressive accountants? Like some people are not and some are more
We're
aggressive?
definitely not conservative.
Yeah, that's kind of what.
Here's kind of what people always refer to taxes as a gray area, right? The tax code is over 5,000 pages long. Only the first 70 actually tell us how much income tax we have to pay and what we have to pay it on. The other 4,930 pages tell us how to not pay taxes. Taxes are not gray. They are very black and white, but it's the understanding of that tax code that allows you to do more than others. Does that help answer your question?
Do you have any clients that have invested in like the tenants in common? Is that?
I do.
something you
Yeah, I actually
believe
have.
in?
In the right situation, it's always a good option. But the tenant in common agreement more so has to do with how I structure my business entities than a tax consequence. Because as far as a TIC agreement goes, the income and all the expenses are really just split between the owners. It's just like having another entity. So it's more so a legal contract agreement than a tax problem.
Do you get to depreciate that
Yeah.
building?
Again, and then everything that happens within that TIC agreement is just split between the owners. Good questions. Any other questions so far? No? Good. What? We're good on time. We're good about 20 minutes. Besides, so to answer, to kind of go into it again, the reason why I talk about real estate is for obvious reasons. We're in a real estate office. But again, there is a lot of different opportunities where we can help clients produce that wealth, produce that income. And it just kind of depends on what you guys want to do. Do you want to get into crypto? Okay, great. Let's get into crypto. Let's kind of dive into it. I have some great resources and I have some great strategies to invest in crypto. I hold crypto, but I only hold it in my Roth IRA. The reason I do that is because when Doge goes to the moon, I'm not going to be taxed on it, right? Or different things like that. So that, but we will look at all of that different information with all of our clients. So the 1031 question, I kind of got into it, but I just wanted to go over the other questions you guys had real quick, and then I'll open it up for other questions. But the 1031 question, we kind of dived into it just a little bit. What other questions would you have around the 1031?
Yeah, just the specifics regarding the strategies you've seen, in our marketplace, what tips and tricks there are, perhaps even maybe strategies in that area.
Yeah. So a 1031 is pretty cut and dry as far as you should use it to defer capital gains, unless obviously you need to capture the equity for another reason, then pay the tax, right? You don't have a lot of options at that point. I'm actually working with one client right now who they do the Burr method of investing. So they'll buy, rehab, rent, and then refinance to get into a new property. This client lived in this property for 2 years, and it's year 4, and they're wanting to transact and move it into another property. Rather than have that client do a 1031 exchange, because they qualify for a $500,000 exclusion, they wouldn't pay taxes on the gain, and they have about $350,000 of equity. So I am advising that they sell the property, since they're not going to owe taxes on it anyways, and then move that money into their new investment projects. Does that make sense?
Yeah.
Rather than investing it or doing it through a 1031 exchange, it just is cleaner and they get a better rate or long-term tax savings by just selling the property than deferring gains.
Awesome.
Okay. But again, for all of my clients who are in real estate, I always recommend doing a 1031 exchange. Deductions. I know there were a lot of questions about deductions. Did I help answer some of those questions, or does anyone else have any other questions about deductions? Go for it.
I have a more, it can be later.
You're okay. Go for it.
So I do real estate, but I also have a vending business.
Okay.
So I get a lot of write-offs from both,
Yep.
because they're both awesome cash businesses. Is there a way to write off? So for my office, I have 1 bedroom in my house that I use exclusively for work.
Yeah.
But then there's a good portion of my garage that's also used for vending, the
Yeah.
inventory and whatnot. Can I write that portion off or?
Yeah, it would always come back to portions in this specific example, like, and for the rest of you guys who might have a home office, it's always gonna come back to portions, right? So I'll use myself as the example to help answer your question, okay? I have a home office space that takes up roughly 27% of my entire house. I know that number off the top of my head because I use this example all the time and I've gone through and done the calculations, right? How I deduct these expenses is I work pretty much half and half from my office and my home. But when I am home, I just time what my usage is of like my utilities, for example, right? And then at the end of the month, when I get my bill, say my electric bill is $150, I deduct the portion that is associated to my business at home. For you, the only difference would be I now have two businesses. So I would just have to keep track of how much business is in my real estate business versus my vending business and associate those costs to those if they're in separate businesses.
But if the garage isn't calculated in square footage and.
Take the square footage.
Just take the square footage.
What about this
Added
option?
to
When,
the total
when I had a
cost.
landscape business, we used to live in Pleasant Grove, but all my work's in Salt Lake County, so I leased a yard for my
Yeah.
trucks, trailers, equipment and stuff like that up here. When I moved to Draper, we consolidated, had an acre lot, and Draper allowed me to move my trucks and trailers and loaders to my home. So I did a lease agreement with my S corp, rather, because it's outside, right? Or in your case, it's like, what would a storage unit cost you for that type of time? If you lease the space to your entity.
Yeah.
Now you have a lease payment and you don't have to worry about all that shit.
Yeah.
No, yeah.
And then you just classify that lease payment as an income, as a rental income. Yeah, that's a good thought. Good question. Does that help answer the question?
Yeah.
Okay. Any other questions around deductions? I think the biggest things are purpose. If you didn't already write them down. Necessary. Ordinary and reasonable.
Reasonable.
Reasonable,
That's an interpretation involved to it.
a little bit.
I shouldn't have brought it.
And then not having to pay. I think we talked pretty well about how you guys specifically cannot pay taxes. Right? Put your money to work. Just because you make more money does not mean that you pay more in taxes if you do it right, to be honest with you. Question.
I got a strategy question for you.
Yeah, go for it.
We all work with a lot of clients that bought a house from us and then they're selling to buy another house.
Mhm.
And we always encourage people, look at your options. Maybe keep that house
Mhm.
as a rental and buy another one. I've got a client that's on their fifth house. They sell their house every two and a half years
Yeah,
to avoid that tax. One was to pay off college loans and then one was to pay off another debt. And now they're using it for a down payment on another house. But when you have someone that is selling their say they want to keep their primary and then buy another house,
yeah.
what do you do with that primary house now that you're going to keep it as a rental? What's your best strategy? Because it's going to turn into a rental property
Yeah.
and eventually probably be a 1031 exchange. Is there anything you do right when you make that transition to a rental property that helps you later tax wise?
Nothing, so nothing that would necessarily help you later.
Okay.
But there are some things that I would walk through with this client if they were my client. The first thing that I would do if they convert a residence into a rental is create an LLC. Just for your liability protection. Again, I'm not an attorney. I'll never profess to be an attorney, but I want to make sure that my clients are protected.
Would you do that LLC specifically for that property only? Or does it matter?
Yeah, it doesn't really, it depends on the client, the risk tolerance that they're willing to take on and what their other financial landscape looks like. I always encourage clients to have the house in at least a rental at the very least, but no more than 3 or 4 properties in one LLC, just for liability purposes, okay? But then what I would do is I would then go get a bank account set up. so that they can keep track of the rental income and the rental expenses. Again, not only is just, it looks clean, but it'll also allow them to keep track of that income and expenses better, okay? And then after that, they're kind of just off to the races. Now, another rule of thumb that I always tell investors, and not just people that are wanting to get into their first home, but maybe they already have a property, whether that's a single family, multifamily, or a 1632 plex, whatever that might be, is would you as an investor buy the property right now? If the answer is yes, then refinance, capture capital, and move that into another project. If the answer is no, then 1031 and do a new project. Because I get a lot of questions on should I sell or should I hold it? And that's always my response is, would you buy this as an investor right now in the current market with the current rents and the current rehab that's been used to run the property? If the answer is yes, then refinance. And if the answer is no, sell it.
He's gonna get a lot of advantages just by turning it into a rental, even if he does sell it within the next 3 years.
Correct.
Because as a homeowner, you can't write off your repairs,
Yeah.
but as a landlord, you can. So those types of expenses now, he's gonna get that deduction. He can also start appreciating it right now, but then if he sells it and does the tax exemption,
you're
there's a
basic.
recapture, isn't there?
There could be your depreciation will just reduce your basis.
Yeah.
So there could be a taxable transaction at the end if they decide to
It's
sell
good
it.
though, because you can do both.
Especially for W-2 individuals who are just working that want to get into a rental property. Absolutely, because then again, they have deductions, whereas with the W-2, they don't have deductions. Did that answer your question?
Yes.
Okay, good question. Anyone else live or on? Yeah, go for it.
What would you say the biggest benefits would be moving from a sole proprietor to an S corp?
Okay, good question. So the biggest reason why we do this is your Social Security and your Medicare taxes. When you are an LLC, 100% of your profits, no, you're good. 100% of your profits are taxed federally, Social Security, Medicare, and state, okay? Which can comprise upwards of 50% in taxes, to be honest with you, depending on how much money you make. Whereas if you are an S corporation, okay, you pay yourself a wage, and on this wage, you pay federal, Social Security, Medicare, and state taxes, and on your profits, you just pay federal and state income tax. For someone making $100,000 in real estate, this is the difference between paying $30,000 in taxes and someone paying $12,000 in taxes, depending on what their write-offs are.
Yeah.
And if your accountant just tells you to buy a new truck at the end of every year, find a new accountant.
Nice.
Good question. Does that help answer your question? Whoops. Oh, that's hilarious. Okay, Robert asked, do I have a list of deductions, mortgage payments, home auto? I do. In fact, at the end of this, in the next 5 minutes or so, I'm going to put my contact information in. If you want to send me an email and just ask for that list, I have a general list of business expenses that I'd be happy to send you. And then Missy, I'll put that up in just 1 sec. Any other questions from our group online?
Did that first? Did I miss the first question?
Oh, yeah, sorry, Rob, I didn't even see that. Thank you. So Robert asked, what are the best tools or apps to track expenses and miles? To be honest with you, Robert, they're a dime a dozen. For those of you who don't, first off, I'll say if you're making over $120,000 in your business, I would highly recommend that you pay someone to keep track of your income and expenses. Keep the reports of your profit and loss, your balance sheet, because then it is all clean. Like I said before, a lot of us probably didn't go to a school for accounting, so you probably don't know how to keep track of a balance sheet or what's all entailed in a balance sheet, but someone who is a professional will. So if you're making over $120,000, just pay the, $50 to $200 a month to have someone keep track of that, because that headache will help you out in the long run. But if you're not, the best tools and apps QuickBooks Self-Employed is always going to be the best one to use. It's $20 to $40 based on the add-ons that you use, which is relatively cheap. You just have to go in and do the work there. Excel or Google Sheets is always good just to keep track of all of your income and expenses. Truebill is a good one as far as an app to keep track of your income and expenses. As far as miles go, Miles IQ is a really good one. But again, those apps are a dime a dozen that you can just look up on the App Store to keep track of your miles. So, okay. Hopefully that helps answer that question as well. Anything else?
Thank you. That was awesome.
Yeah,
That
Thank
was
you guys
excellent.
for having me.
That was really
Hopefully you
great.
learned a little bit. And if you do have any questions, I think we're going to put that contact information up on the screen. And if you do have any questions, please reach out. We're more than happy to help.
How long have you been strategist? You've been doing it how long?
I'm going into my 6th year this year.
That's amazing. That's awesome.
Yeah. I never thought I'd be filing tax returns for a living, but I love it. Yeah. Tax season's a drag. I work 12 hours a day, 14 hours a day, but I wouldn't do it if I didn't love it.
That's cool.
Yeah.
It's great.
I'm glad somebody loves it.
Yeah.
We need you. Awesome.
Thank you,
Hey,
guys.
anybody on Zoom have any questions? Unmute yourself. You good? All right.
Do you work with people in Oregon?
Say that again.
Sorry, my mic was pointed up. Do you work with anybody in like Oregon? Does it
Yeah.
matter the state?
Yeah, so we're licensed to do taxes all across the country. On my team, I have several different CPAs. I have different CMAs. So we're licensed to do taxes in all 50 states.
Thank you.
Yeah.
Awesome.
Okay.
Question.
Good info. Thanks so much. That was awesome. You guys take a screenshot of that on Zoom so you have his contact information.